Mein Name ist Stefan Fröhlich und ich darf Sie im Namen von WH Selfinvest, dem Broker Ihres Vertrauens, ganz herzlich begrüßen. Wir machen ja hier den ganzen Tag einen Vortrag nach dem anderen und jetzt auch etwas ganz Besonderes. Wir machen jetzt Live-Trading hier. Ja? Jetzt wird wirklich live gehandelt und zwar aus dem Orderbuch. Ja? Sie können das hier schon mal an diesem wunderbaren Flatscreen sehen. Da geht es jetzt gleich richtig ab. Da gibt es jetzt gleich Action. Wir haben die Kollegen von Crescendo Trading eingeladen und freue mich sehr, dass ihr da seid. Sie kommen aus Paris, aus Frankreich, sind dort auch sehr erfolgreich in diesem Metier tätig als Trader, sind wirklich professionelle Trader. Das ist der Nabil und der Tarek. Herzlich willkommen. Ah, okay. Umgekehrt, so rum. Sorry. Eine Besonderheit ist hier noch anzumerken bei diesem Vortrag, das Ganze wird in Englisch ablaufen. Und ja, falls Sie Fragen haben, Sie können die auch auf Deutsch ruhig stellen, das ist nicht das Problem, dann werde ich versuchen, das zu übersetzen. Aber das kriegen wir dann schon irgendwie hin. Ja? Ansonsten ist ja viel visuell zu sehen, also ich denke mal, Sie werden das dann trotzdem auch gut mitkriegen, falls Sie der englischen Sprache nicht ganz mächtig sind. Kein Problem. So, dann legen wir jetzt los. Also, Tarek und Nabil. Und es geht ums Trading aus dem Orderbuch. Viel Spaß.
Hi everyone. So we'll try to explain you the best as we can in 1 hour what we do and show you live how we do it. Basically, for me, trading can't be taught only with books or with theoretical stuff, because trading is very dynamic. So you have to see what we explain. So that's why all the training we do it with us trading live. So here, just to explain you, does anyone have any experience with the order book? Any of you? Order book? No one? No one, okay, perfect, a bit, okay. So those are 3 different markets. This one is the DAX, you all know. This one is the Bund, German bonds, 10 years. And this one is the Nasdaq, the new technologies indices in the US, okay? Here in the middle, you will have the prices. So let's take the DAX, it's 13,186, okay? And here are the lot waiting to buy the DAX, and here the lot waiting to sell the DAX. That means if, for example, I want to buy the DAX, I will have to meet someone that wants to sell. That's the market. Most of the people that trade CFDs, you don't see that on CFDs, because CFDs is an OTC market, over the counter. The trade are not sent on the financial places like financial markets, real financial markets. Here, the trades are routed through Eurex in Frankfurt, and so sent in the market. So here you will have all the biggest investors, you will have the banks, the hedge funds, the prop trading firm. Whereas CFDs, you don't often have that. Okay? So for us, what we will try to see is the buyers and the sellers. Is it clear for everyone? Yeah? Perfect. How we will see that? We will see that using this particular tool, the order book. Basically, it's derived from a strategy on the physical outcry. When people were trading the markets, they were all like screaming, okay, I buy, I don't know, Dutch Bourse, I buy blah, blah, blah. You will have all the different actors and they know each other. That's how it started. So when you see, for example, Commerzbank buying a stock from a Volkswagen, you know Commerzbank is very big. There's a huge chance that they will buy a lot of Volkswagen. So if I'm next to him, I see him buying, I say, oh, he's big, he's going to buy a lot, the market will go up. What I will do what we call front running. That means I will buy a bit, because I'm small, I can buy easily. I buy a bit, and I wait for Commerzbank to buy all the stocks he needs, and the market will go up. Does it make sense? But then, in the early 2000s, they all moved to electronic trading. That's where it became from the physical outcry to there. Just to illustrate, Tarek took a short at 13,186. That means he sold this area because he saw a seller. here is the lowest of the day. For the moment, he's making that money, and he put its stops 3 points from there. That means, okay, if it breaks the low here, we believe that there will be a lot of stop orders, so the market might go down a lot. Right. So now his orders, he put a stop at the break-even. Worst case scenario will be flat. Best case scenario, it will get out of this range and break the lowest of the day. All the stops will be initiated, and look, now you can see sellers, a lot of sellers. We could see a big order that disappeared. So now we can be the sellers coming a lot. His stop will be following the market. He's trailing the market so that he will make a minimum amount of money. What he's seeing, look, have you seen this big order? He sold everything from there to there, and the seller is still selling. If you see here, you can see it's still selling a lot. It broke the previous range. It broke the lowest of the day. He could see only sellers. That's why he kept his order in the market. When he will see buyers, he will exit. So he stops at 80. He's short at 86. The seller is still present, you see. Whenever the market tries to go up, someone is selling a huge quantity, and it doesn't let the market breathe. So his stop is here, 70. Can you see the stop here? That's where the stop is. So worst case scenario, he'll make this amount of money. Best case scenario, it will keep on plunging because now they broke the lowest of the day and the market is still selling a lot. The seller doesn't let the market breathe. You can see whenever the market tries to buy, someone, a big hand probably, is selling. When we will see this seller disappear, we will exit as well. So what we see here is basically all the inside of a candle, what you can see in a candle. Now someone is buying, he exited his trade. So he sold here, and he bought back here. Make sense to you? Yeah, okay. So he made, tu peux appuyer dessus? Appuie dessus. So that's what he traded beforehand. So now he made like 400 on the DAX. And you can see a lot of small order and one big one. Basically, he was waiting for that. You can see here, he bought, he sold, small loss. He bought, he sold, small loss. He bought, he sold. So he's making a lot of money or a lot of loss, a few losses, few money. That's not what he was looking for. He was looking for a bigger trade like this one. That's where he made his money. So I will explain you the different type of strategy we'll use. For us, there's a lot of kind of traders. I'm not trading the same way Tarek will. You will not be trading the same way you will, because we all different. We have all different kind of way to get into the market, a way we are confident with. So what we'll do is we'll see two different type of market winning expectation. Basically, what I will do is I will make a lot of winning trades, like 80–70% of winning trades, and my main issue will be to manage this losing. So basically, I will trade, okay, small gain, because I will be more picky on my entry. Yeah. This one is 30 minutes. This one is 30 minutes candle, and before it was 1 minute. Yeah. This one is 30 minutes. 30 minutes, yeah. 30, yeah. 30. 30, yeah. We don't have time, otherwise I will have explained how we get the different levels. We start with like big time frames, like 4 hours, 1 day. We try to get all the different levels, the support, resistance. Yeah, there's a big support at 61. That's what I think it will be waiting for. But you can't see on the 1 minute. We'll see on the biggest, you see. It's 30 minutes. On 30 minutes, you have a big level there. Yeah, I didn't explain that. So that's how we prepare our day. So basically, when we arrive, we don't trade straight away. You have to prepare your trading day. You see the charts, you see the news, what happened yesterday, what will happen today, how did the market behave during the night, what did the Asian market did, what did the future during the night, etc., etc. A lot of information. You got to get everything clear before you trade. It's not something you go and you trade straight away. Otherwise, it's casino. That's not what we want. We want something thoroughly thought. So, same, we will get our level, we'll do everything, but for me, I will expect small gains. So when I see a seller, I sell. Straight away, I will buy when I see a buyer. So a lot of small trades, and the main risk is to manage this one. Whereas Tarek, what he does a lot is, he will do a lot of small losses, small losses, but then the winning will be huge. Just to get back to the live feed, is short on the Bund. You can see here on the blue column here, that's the volume at price. That means that at 171.05, 447 futures were traded, etc., etc. So here it's a big volume area, and it didn't manage to go above this one, so it might go down again. And you see the Bund is correlated with the DAX. When the indices, the stocks are going up, the bonds are going down. So if the DAX managed to do its correction, the Bund will follow as well. Does it make sense? So now he shorted 5 lots at 82, and he's trying to exit at 80 before the biggest volume of the day. Here, this area is where the seller and the buyer are most trading. So it's a bit of a risk. Yeah.
How do you know that's not a spoofing order?
Which one?
The one on the 178.9, the big one. The one.
This one? We don't know yet, but we want to exit before. This, so it's been, so someone sold a lot and put a lot of lots waiting, so now he exited his position and he made 100 euro. This one we don't know yet, but if it comes closer and you see this one reducing, yeah, just to explain you, you asked me, you asked me, how do you know if it's not a spoofing? What is a spoofing? A spoofing is someone that wants to manipulate the market, to let the market go in a certain way. For example, de quoi? Ouais, je vais le montrer. For example, let's say I have a lot of lots, I want the market to go up, I will put a lot of orders, and people will think, oh, there's a big buyer, I will buy as well. But in fact, he doesn't want to buy, he wants to sell. So when people will buy, he will sell them. And when he finishes selling, he will remove all his waiting orders and put them on the other side. So people will panic. Oh, shit. There's no buyer anymore. The market will plunge, and they will sell, and he will make his profit from that. So you have to be careful of all the market manipulation. So here the trade, tu peux le remettre? The trade made by Tarek. You see, he did a lot of trades today on the Bund, scalping. On the Bund, he's doing the other strategy. He's doing a lot of small trades, a lot of small trade, and he will manage the losing position. So here, he sold the up of the candle, and when it arrived at the support, he didn't want to take the risk. Okay, is the market going down or not? I don't want to take the risk. I'm taking my money. So. On the other side, on the DAX, what he did is, okay, I think the market will go down, I will keep my position. You see the difference. So he's using both strategies, but differently on 2 different markets. Does it make sense, or it's a bit too... Sure. So now when the market is quiet, don't trade. If there is no trade, don't try to invent one. As I do, I'd rather lose my time than my money. So if there's no trade, don't trade. Wait for the correct pattern. If there's no pattern, okay, sure. For example, Tarek, for the moment, he doesn't say anything because it's in between this range. He will wait for the market to show him if there's a big buying hand or a big selling hand. So basically, when you do only chart, you don't see what's really happening on the market. You say, okay, I have a moving average, crossing another moving average, and I see a candle. I say, okay. But you say, okay, I have a selling point. Yeah, sure, you have a selling point on the chart. But what if there's a big order that's just selling everything? So it's a buying signal, but on the market you see someone selling. It will be a bit suicidal to go against him. So for us, when you have a setup, for example, a support or a resistance, if it's not confirmed by the order book, we don't take it. So if it goes to if the market go down to a support, and we see a buyer, we'll buy with him. If it goes down to a support, we don't see anything, or even worse, we see a seller, maybe we'll take the opposite direction and try to play the breakout. So our trading will be only on the hypothesis that the order book will confirm the vision we have on the chart. If there is a discrepancy between what we see on the chart and what we see on the order book, okay, let's wait for more visibility. Okay? And there's a part, if there's a news, there's a lot of news at the moment. Trump is telling whatever he wants every day. So don't go against Trump. Even if you don't believe what he says, if you see someone buying like crazy, okay, maybe let's wait for a good point and buy with him. Okay, make sense? So now, look, the market is completely stuck between 2 points. There's nothing. On the other hand, the DAX is closing to the lowest of the day. So let's see. That's why Tarek put the chart of the DAX. Let's see what will happen. We can see the trend is completely down. So it's a complete downtrend. The lower are lower from time to time, you see? Low, low, low. And the highest are getting lower as well. So that's the definition of a downtrend. So there's two possible trades we can take here. Either we say we want to be on the downtrend. So what we will do, we will wait for market correction. So we will wait for market correction to sell. We will never sell at the lowest because the market never goes down like that for an hour. There's always correction. So we'll wait for correction. And when this correction will end and we see seller coming back, we'll go with them. On the other hand, what I like to do is waiting for the market to go down and play the correction. So we'll try to buy here. And those orders are very small because it's just in and out. You can't allow yourself to stay too long against the trend. So I will wait for the market to plunge. And if the market go down, I will wait for the buyer to come back and buy with them and take the correction. It's two different kind of way to see the markets. Okay? It's question.
So is there a certain ratio that you use when you think about a buy side and sell side? So it's like 2 in 1 and then you are on the one side or the other side, or how do you work this out?
Basically, when we do our morning preparation, we often say, okay, the market looks bullish, looks sellish, so look bearish. We don't know which one to take. Okay, now there's a news from Trump saying, yeah, okay, we will deal with China. What we'll try to take is buying orders, because fundamentally, if we reach an agreement with China, there's a lot of chance the market will go up. On the other hand, you said, oh, I will put way more tax on China, Europe, whatever you want. You will try to take the downtrend. But then it depends where the market is as well, and depend on the volatility during the day. If you see the volatility is very big, you might take correction as well. But it's way more difficult to go against the trend where there's news. If there's no news, you identify the market at the start of the starting of your day. You say, okay, the volatility is manageable, okay, or it's a normal volatility, so I will trade the same way I used to do. If you, for example, for myself, I tend to sell the market because we are the highest of all time. But even there, you see the market is getting new highs. That's why I do only in and out. I don't try to say, okay, the trend will reverse and I will be in the downtrend. It's too dangerous. So I will take the knowing that the fundamental trend is up. You can't be more up than that. Apart from those days, it corrected a bit, but the DAX is still 13,172. Then the market does corrections. So at the first, when you start your day, you will have to define the correct market trend and trade accordingly. So depending on people, if Tarek wants to take trades on the trend, he will take more selling position today because the trend today is selling. For myself, I will be more on buying position because I will try to reach all the corrections. So it depends on the profile, trader profile. Did I answer correctly? Or? Okay, thank you. So now you see the market is stuck. The DAX is still at the lowest. There's few volumes here. That means that no one bought or sold here. So from 71, from the lowest of the day, the lowest is here. There's not that much volume. So we're still stuck at the lowest of the day. If nothing happened, we won't trade. The thing that bothers us is that's the time. It's 20 past 12. It's not the best time to trade. Normally, we tend to trade from 9 to 12, and then from 2 to half 5. Why? Because in our trading style, we require a lot of liquidity. Liquidity is one of the first components for us to enter the market. If the liquidity is not good enough, we will not enter the market. What happens when the liquidity is low is what you see during bank holidays. The market can go up or down with no correction whatsoever. Why? Because a lot of market participants will be off this day. And if they are off, and for example, let's say someone from JP Morgan received an order, okay, you have to buy, I don't know, 10,000 bonds, he will buy them. But if there's no one in front, he will keep buying, keep buying, keep buying, and you will see like market like that with no one entering. And that's very difficult for us because what we like is when there's a fight between the buyer and the sellers. Does it make sense? And what happened between 12 and 2, most of the market participants are not in front of their screens, so the liquidity is going down. So that's why it's a bit more difficult. So we did trade before coming here, you see, but then we took some trades, but knowing that it's not the best time to trade, okay? That's why we advise people not to trade at any time. You have to choose the perfect market timing for entering the market, depending on how you see the market. If you like a trend, if you like the trend or anything, you can trade a different time frame. For us, if you're a scalper, I'd rather do it 9 to 5, half 5. When the European session closes, maybe you have to stop. Yeah. Question? Yeah.
What kind of software are you using? Is it Atas? And another question is this DAX futures? And how big is your account? Well, how big is the account that you use here?
We have a personal question about the size of the account. So yeah, we use Atas, order flow. I think they're just on the other side. We've been using them for some time now. Before we were using another platform, more professional platform. But before we give some trading training, some people, when they start and they have to pay 800 for a platform, it's a bit expensive for them. That's why we moved on Atas, which is as good as the other ones and cheaper. Okay. So they developed the order book to fit what we asked them. So that's why now we can trade the same way we used to trade on professional platform. And we trade only futures. We don't trade, I told you, we don't trade CFDs. Why? Because CFDs, there's no order book. The market, the liquidity provider might be your broker. So basically, he's giving you the quotation. Whereas here, the quotation are done by the market participant. When someone buys, the market goes up. At AG, at all those brokers, so I don't say it's not serious. It's just that they can't have the liquidity like this one, and they can't show you the market participant. That's the difference. De quoi? Here you can see Tarek. The Bund went up. Voilà. Sorry, the Bund went down, and he tried to sell 88. He put an order. He did put an order here, a selling order, to get the breakout. But unfortunately, it hasn't been executed. That's one of the problems when you trade between 12 and 2. The liquidity is low, so you have less chance to be executed. But then the market went down, so now he's waiting for another order. He took off his order, and he's waiting for another trade. Now you can see the correlation with the DAX is perfect. They bought the DAX, and they sold the Bunds. Okay. So that's what they did. So those ones are normally, they have a correlation close to 1. That's what we say. It's not 1 at all. But when the Bund is going down, as I told you, the DAX is going up. So you have to take an eye on one and another if you want to trade both of them. So what he tried is, he tried to buy the DAX here. Because, oh, the DAX is going up. You know, it broke, but no buyer at all. Broke with no buyers. So I'm going to try to buy the DAX, but it hasn't been executed on the DAX. So he said, okay, I'm going to sell the Bund. It's basically roughly equivalent. But unfortunately, it hasn't been executed on the Bund as well. So now he's waiting for another order. As I told you, if there's nothing, you don't have to find a trade. You don't have to say, okay, today I will take 100 trades. No. It's not for you to decide. It's for the market to decide. If there's nothing to do, don't do anything. Sometimes it's like very, I don't know, you don't know what's happening. The market is in a shitty range. Okay, don't do anything. On the other side, if the market is full of volatility, full of liquidity, a lot of news going on, that's where you will make most of your money. So don't try to get some money when the market doesn't give you any. It's not for you to choose. Basically, that's what we say. Make sense? Yes? It's clear? Okay. So now what you see, look, no one's buying, no one's selling, no orders. You have few orders passing, someone bought, but it doesn't give us enough information to enter the market. If we see someone recharging, buying, oh shit, someone is hiding, that's what we call an iceberg. What is an iceberg? It's the opposite of what we explained just before, called the spoofing. The spoofing is pretending to put a lot of orders for the market to go up. But if the market is coming close to his orders, it will take them off because it doesn't want to be buying. Make sense? The iceberg is the opposite. The iceberg basically has a big hand, and what he wants is the market does not detect his big hands. So we'll try to sell or buy little by little. Because if I see like someone big entering the market, I will buy with him, as I told you earlier. Oh, there's a big buyer, I will buy. So the guy is, I don't want people to see that I have a lot of lots to sell in the market or to buy in the market, so we'll hide myself. Selling, waiting, or is any buyer? Selling, waiting. Don't put too much orders here, because if I put too much orders, they will see that I'm big. That's the iceberg. And this one is the opposite. If you see one of the iceberg, you might try to follow him, because at the end of the day, if he doesn't see, for example, he wants to buy, he doesn't see enough sellers, he will buy everything. But for the moment, we see none of them. We don't see buyers, we don't see sellers, we see nothing. The market is, look, the size of the candles. Before, they were quite big. Now, they're quite very small with a small body. All of you know how the candles work? Yeah? Okay. How to interpret a candle, it's different. So now the market is going clearly up, but it's not straight enough for us to decide to take a position. So we will wait. The trader's life is to wait. Be patient. Follow your strategy. Don't take trades because you're bored. We see a lot of people in our trading floor. We saw hundreds of traders. And one of the main reasons they fail is because they don't respect their own strategy. As we said, there's two perfect rules in trading is have a trading plan and respect your trading plan. And unfortunately, people do a trading plan, but when they're in front of their screen, they forget everything and they just buy and sell randomly. I don't know if you experienced that. I hope not. That's why you have to be very rigorous and disciplined on what you do. If you say, okay, normally, I say that, but we don't even respect our own strategy because normally we don't trade between 12 and 2. So, but you will be bored to death. Exactly, you will be bored to death. That's why we're trading. So if we say, okay, I'm waiting for the market to go there to sell, and I'm waiting for the market to break this level and then to sell. If it's in between, okay, you get bored. Do something else. See what's happening on the news. Watch, I don't know, watch CNBC, do what you want. But if there's nothing to do, don't do anything. It's one of the most important rules. And for me, the second important rule is the daily limit. So the way we trade is we are allowed to lose a certain amount per day. That's what we call the daily limit. If you reach this amount, you're out for the day. Oh, he shorted, look. Now he did short the market here. I think he did short because he thought, look, the low, the high are getting lower, and they managed to break 3 times. You see, the lower are lower and the higher are lower. So there's a huge chance that they broke this level. That's why he shorted this level. And he put because it's very dangerous, it's a bit of a risky trade. What he did, he put his stop very close. He said, okay, for this one, I only allow myself to lose 1 point of DAX, so 2 ticks. If I'm correct, it might go down to here and then to the lowest. You see? If I'm not correct, it's only 2 ticks. already made money. Worst case scenario, okay, it's fine. I paid the market for this wrong trade. The market went back, he exited his trade, he's fine. You see, he's allowed to lose just few ticks, but it was the same thing as this one. See, if it goes down, he was allowed to lose a bit of ticks, and on the other side, he made a lot of money. Here was the same scenario. Okay, if the market is going up, if there's a small correction, it will exit myself. Don't worry. I'm prepared. It's a bit unlucky because it went to its top and it went down. That happened on the market, it's fine. Don't use that as an excuse to enter again. We see that a lot. Don't do that. We have a lot of graduates. When something like that happens, the market goes, no, I will sell again. No, you have your scenario. Okay, you've been stopped. Fine. Let's work on another scenario. Don't try to be on the market straight away because you're angry because you lost. No, you had your scenario. Sure, it went down. Perfect. Let's wait for the other one. So it's a bit unlucky because it was the highest. The market tends to make everything to make you crazy. So just picking the stops, there's a few stops here, let's reach them. But then it's fine. It was priced on our strategy. Okay, that's why we're allowed to lose.
The profit target normally you take, is it 1 to 2, or was it normally when you take a risk to profit target, you go for a profit target or you trail the whole order until you have a specific limit?
What I do is I exit the trade the same way I enter them. For example, when we buy, it's because we detected buyers. Okay. When we sell, it's because we saw sellers. So if I buy, for example, let's say I bought an area here, and the market is going up, and here I see sellers, I will exit there. Even if afterwards it went there, as long as I see sellers, I exit. Because when you see sellers, there's a risk. If you see sellers, but you see buyers as well, and they might be stronger, okay, look, I can see some sellers, but the buyers are stronger. I will take the risk to see the next level. So that's why it's very dynamic. For me, most of the time when I have a profit target, let's say, for example, I bought here, my profit target was here, 80% of the time I will exit before. Here is the perfect target, but on paper it doesn't happen like that. So I say, okay, now if I buy here, the next support or next resistance or whatever is there, okay, sure, I will try to do the whole move. But then in the middle of the move, you see a lot of sellers, you won't go against them. We see people on the trading floor, come on, go, go. It's like a racing, like horse racing. No, it's not betting. Come on, you can do it. No, you see sellers. Okay, are you taking the risk? You can take the risk and say, okay, I made some money. I will wait for the full move. If the full move doesn't happen, it go down. Can be what happened, what Tarek did, you see? He could have exited here. He said, no, my target is here. Fine, because when it happens, you make way more money than what you lose. So it's fine. So for us, that's what I always say. You have to treat your exit the same way you enter the market. You enter because you see a buyer. You exit because you see a seller. And a lot of people, they sell because, I made enough money.
In this type of trading, do you also use footprint charts? Because I see you only using this smart DOM in ATAS, and there are also very nice features for getting insights.
There's a lot of tools you can use. There's bookmaps, there's footprints, there's market profiles. We don't use that. When we used to trade before with Tarek in prop trading firm or hedge fund, we didn't have all those tools. We had only order books and charts. And the charts were not even good. It was a bit shitty charts. But what we were trading most were the order book. Like 100%, 80% of the time were on the order book. So that's why sometimes if you see, we'll show you a picture of a prop trading firm in UK, the same as the one we worked in. You can see people with 6 screens, not one chart. Like 100 of order book. Now we do something a bit different. We align the chart with the order book. That means we are more picky on the trades because we select them on the chart first. This way we avoid all those noise. Whereas beforehand we were like almost 90% of the time on the market. That's what the market maker do. A market maker is paid by the exchange to provide liquidity. So the markets give him money, you're going to trade every price. So the guy is on the market all the time. We don't do that. But now is invited, what you say, some useful tool. Bookmap is showing the difference between the sellers, the buyers, how it evolved. Is there some like iceberg or spoofing? Okay, just to come back to the that's something, for example, that is used on volume profile or market profile. There's a zone here, you see, that's what we call a bell. And the market, when you finish a bell, normally will try to exit this bell and do another one. Tarek, what he did is trying to sell the end of the bell for the market to go down to the lowest and create a new bell. So that's something you can find on most of the tool you're talking. But for us, because we use not to use this tool, we can analyze all the things that the tool is providing. We don't use them. But there's a lot of important stuff there, like footprint. We see a lot of trading using footprint. Gives you some good insight of the market. Yeah. But we personally don't need them. So now we have a selling order at 170.83, okay? 5 lot. So he's waiting to sell here. Unfortunately, the market didn't take him yet. So selling limit. We can see the quantity. Oh. So now it doesn't look good. I don't think it will be executed because someone is selling. So we can see there's someone selling, but we don't have the liquidity to be executed here. On the normal time, you might have more liquidity and more range and allows you to exit, enter. And on the other hand, you can see the DAX is going up. You see, it didn't manage to do a new low, but on the other hand, he managed to do a third new high, so he might keep going up. That means the bond, there's a huge chance that the bond will go down. Make sense to you, all this correlation stuff? It's very important to see all the correlation between markets. You can see the correlation between US market and European market, between bond market and stock market, all this stuff. It's very important because it gives you a lot of opportunity. Yeah?
Could you please explain again the correlation between DAX and future, Bund future? What is the reason? Why does it correlate? I don't understand.
So basically, when you have, for example, let's say you are asset manager and you have all this chart with, okay, I have 45% on the stock market, I have 20% on the bond market, 30% on the, I don't know, FX or whatever. We don't care. Let's say, okay, there's a news, there's something saying the stock market is giving more return than the bond market. So whenever they exit one, they take the money from the other one. So let's say they increase the rate. The rate on the bond market will be better. They will try to buy bonds. They will try to get bonds because now the return is getting better. And to get this money, they will sell their stocks. That's why we call it, for example, you heard about flight to quality. Flight to quality, you exit one risky asset to get into a safer one. Bonds are supposed to be safe. They give you a coupon, so you have your money every year or at the end. It's predetermined, so okay, that's supposed to be safe. On the other stocks, you don't know. May give you dividend, might not. The return might be higher, or you might lose money. So whenever they say, okay, the situation is shady, now the market is getting a bit tricky, I think there's a recession coming, let's sell the stocks and let's get to one more safer market, a safer product, so they will buy bonds. That's why the bonds on that's why they all left the bond market for the stock market, because the bonds are almost negative on many countries. So the return for the bonds is so bad, they say, okay, let's take some performance on the stock market. And that's why the stock market is keeping on going up, because no one wants to buy bonds where it's so low. So that's the correlation, basically. They go from one to another to get the performance. It's like when they do the same thing with gold. Say, okay, the stock market is getting shady, let's move to gold, because it's supposed to be a precious asset. It's what we call flight to quality. Let's get some quality on another field, another asset. Make sense? Or? And for us, we can see it every day. When the market, the only possible way that they move the same way is when, for example, let's say it's not Draghi, it's Lagarde. Let's say Lagarde say, okay, I will raise the rates. It's the only way where the bonds and the stocks will go the same way. That means normally, when the stock market going up, the bonds are going down. And what you have to know is that the bonds, the price of the bonds, is basically made from the return. Okay? So let's say on the boot, c'est combien? T'as un trade en cours ou pas? C'est combien le return du Bund en ce moment? Hein? Mais dis-moi juste pour voir. 0,4? Bon, 0,4. Just for example, the Bund is negative for the moment. It's minus 0,4. Tarek is just telling me, look, the market went the way he wanted. Unfortunately, because the liquidity was low, it hasn't been executed, so he might miss the trade. He won't try to sell there to get into the trade at all costs, because entering here is not the same as entering here. It's too risky to get there. He said, okay, I wanted to sell here. Unfortunately, I haven't been executed. No worries, I will wait for the next one. The next one might be here, we don't know. We'll wait for another trade. But as long as my own strategy hasn't been activated because whatever reason, I'm not going to divert from that. I will stick with my strategy and find other trade instead of forcing the market to execute me. Make sense to everyone? Yeah? It's a bit, a lot of informations? Sure? Okay. So now it's not the most dynamic market we've seen, unfortunately. The order book are not showing what we want it to show us. Tu peux remettre à zéro les volumes? Ouais. For example, if we see, look, no trade at all, no one is trading. They're moving their position here, but no one sent an order in the market at the moment. Or 2 lots. Someone sold 2 lots, 2 lots. It's boring. That's because it's between 12 and 2. If you watch the US opening at 3:30, it will be completely crazy. When the US open, it goes all in every way. So this is a perfect example. You have to manage the volatility. But then on the other hand, you're sure to be executed because there's so much volume, so much liquidity that normally it makes your trading more easier. So now the DAX went up to 80, to 90, did a small correction. If it comes back there, Tarek will try to sell this point because it was the previous resistance. You see here, the volume, what I told you, volume at price. On 90, it's the end of the volume. That means above there, there's not that much buyers. All the buyers, they stop buying from this point. A bit at 90.5, but above 90.5, it's a bit quiet. They're not buying that much. So for us, if we manage to wait to this area and we see some sellers, we'll enter with them straight away. We have 2 choices. We see some sellers and we don't see that much buyers. If we see buyers very aggressive, wanting to put the market up, we're not going to enter. Okay, so here, they're buying. Let's wait for the next one. It will be the round number, 200. So that's why we're going to wait now. 80 on the DAX. If unfortunately it goes back there, okay, we'll wait for another point. And the Bund, we still have order at 83, but the market went down without us. Right. So you see the Bund is getting rangy. So now it might break there. If we have some chance, it might go up, take us, and then break. Otherwise, it might break straight away. But we're not going to take it randomly. We're going to wait to see what's happening. What? So that's what I explained to you. I said this volume here is a range here. That's the range. This 5-minute chart, that's a range. And I told you the market did the bell. And normally when you finish the bell, when the bell is what we call mature, it will exit the bell and create a new one. And there's a lot of chance that it exits the bell, but the downside. And after that, you have the lowest of the day. So if it breaks this area, you can see the volume here on the blue line are very small. So there's a huge chance that there's not that much buyer here, and the market might go straight to the end. Unfortunately, as I told you, we have not been executed. So we will be patient and see, okay, let's see if we can enter the market. On the other hand, the DAX is coming close to the level where we want to buy, or we want to sell. You see? It went back to here, what we call a pullback. You know what is a pullback? Basically, a pullback is when you have, for example, what's happening here. You have the market doing a resistance. He breaks. Most of the time, he will go back there. And the resistance will become a support. That's what he did. So for me, when I trade, most of the time, those pullback will be a target. That means, for example, let's say, okay, it broke. I sold. My target will be the pullback. But as I told you before, 80% of the time, I don't wait for my target. If I see some buyers before, I will not take the risk, I will exit. Okay? So here, they reached the pullback, and when they reached the pullback, they bought again, and it went up. They did that all the time, you see? They break the new high and pull back. So here it's a different market, the Bund. The Bund is continuing to not do anything. So we keep an eye on it, but it's not very relevant what's happening here. It's just falling. No one is trading. You can see the volume here, it's very low. Sometimes they sell 2 lots, buy 2 lots, nothing. So for us, it's not relevant. What we'll try to reach is, okay, is there something we can detect, something that make us take a position, which is not the case at the moment. So here the DAX is where we wanted him to be, but it's not very clear whether there is sellers or not. That's why I told you. We'll enter if we see sellers. We're not just, okay, the chart tells us there's a resistance, let's sell it. No, it's not that easy, unfortunately. If we don't see sellers, we will not enter it. They went to exactly our level, 90.5, where we told you above that, there's not that much volume. But when it reached this area, only 5 lots executed. That means it's very low. There's not that much buyers, but not that much seller as well. When the risk is too close to 50-50, we don't take it. We try to reach like a 70-80% success rate. When it's too far from that, okay, we take our hands off the mouse and we wait for the next target. And especially here, where we're trading between 12 and 2. So we did some trade already, as I told you. We did someone with you. We did someone that didn't, that wasn't the success, 100% success. We're making money. It's not the time to take some risks. The market still around this level. Let's see what it does. You see, the market doesn't want to fall. It keeps on hitting the resistance. Let's see if some seller will show us his hands, and then we'll be able to enter with him. Does it make sense for everyone? It's clear, or yeah? Sure? Any question? No? The wrong thing here is, look, the buyer is just pushing, and you have less and less correction. So for us, it's getting dangerous to enter where I told you we will look for the liquidity first. If we don't see the liquidity, we're not going to enter. And here, basically, there's no liquidity at all. You see, look, up, a doji, small candle, or it reaches, you can't see anything. And someone is buying. Someone is buying. Oh, there's a huge seller, but straight away, someone bought it. So here, around 89.5, there's like a seller. If it breaks the 90.5, it might go, we don't know where it might go, to 10 points higher. So what Tarek did, he tried to solve this area here, 95.5, because whenever it goes there, someone is selling. Let's see if he will still be here in a minute. But the same way this one was risky, this one is as well very risky. So what he did, he put a stop at 92.5. Because as I told you, if it breaks 90.5, there's no volume here, the market can go up straight away 10 points, which is 20 ticks, which is a lot on the DAX. So in order not to take a too big loss, he's protected himself from the market moving too high. Unfortunately, it's the same. The liquidity is not that good, so it's not executed. Fine, let's wait. So he has an order, a selling order at 84 as well, but he took it off because he wants to sell the DAX instead of the Bund. Okay? So that's why. Now the market is ranging again. It went down. It's not very Easy to read that. There's no one on the market. It's getting smaller and smaller candles. Let's wait. Let's wait. Either 80 is an order placed at 85, 89.5. If it reaches 89.5, it will be selling. If not, you might not see a last trade. You saw a few of them already. You might not see a last one if the market doesn't go there. So for us, the strategy is the most important part. As I told you, have a trading plan and respect your trading plan. Yes? Question? This wasn't really a question, so. Okay, no question. We have still 10 minutes. If you have a question, it's now or never. No question because, yes. Oh, no, 5 minutes. Oh, I was too optimistic. No one has a question? Okay, fine. So the market, look, the market is very tough to read because the same way I showed you on the Bund, or we saw here, it's very indecisive. They're selling a bit more, but with very small candles. That means someone is pulling the market, pulling the market, pulling the market. And because of the time, there's no one to give the liquidity back. There's no confrontation because between the buyer and the seller. It's just one and the other. Seller is coming, buyer is coming. What we want is that. Here is where you make a lot of money, you see? That's where we make our money. Ouais. So if the market goes up again, we'll sell 89.5 with a stop at 82.5. So that means we'll allow ourselves to lose 3 points, 6 ticks. But what we'll try to make is first target here, 83. So it's way more than what we are allowed to lose. And second target might be the lowest of the day. It's the same as here, you see? Here it closed one trade, it closed one trade. But when it goes well, it's a big trade. That's what we do. And here is exactly on the setup. Few losing trades, few flat trades, few winning trades, and one big winning trade. You have to be patient. You have to respect your strategy. Don't get angry if you're not executed. That's what's happened a lot. People get very frustrated when the market doesn't take the order, especially when the order was good, here at 88 or here at 89.5. You have your strategy, stick to it. If you know it's working, if you have a losing strategy, don't stick to it, of course. But if you have winning one, stick to it. That's what Tarex try to do. We have 2 minutes left. Yes?
Today is Friday, it's OE days, so I must be quite different.
Friday? Yeah, Friday, what we do is normally we don't trade until too late. Rest of the day we trade until 4:30 most of the time. Friday, we tend to stop around 4 o'clock because a lot of market participants want to exit their position before the weekend, especially at those times where you can have big news during the weekend, China, Trump, whatever. You're not sure what will happen Monday. If you keep an open position and Monday you have news that make the market go down or up, you might lose, you might win. As I told you, we don't take an order which is where the success rate is close to 50-50. So Friday, we tend to exit a bit earlier than usual because when all the market participants want to exit their position before the weekend, you might have strange market behavior. When I started, I took few loss on the Friday afternoon, end of afternoon. I tried to master that, oh no, I will do. And then I realized that the best way not to lose on Friday is not to trade too late. Yeah.
I think that today, Friday, is option decay OE day, so.
You have the options expiry, but what we will be more focused on is the third Friday of the month, which is the monthly expiries. And ever more if it's June, if it's September, December, and March. That's what we call the 4 witches. These are very particular days. Yeah, you have to be careful. Basically, it's the expiry. I don't know if you know expiry. If you don't know, look it up on internet because I think it's over. Yeah, time is over. Thank you for watching, and I hope it was educational. Thank you.
Dankeschön, ihr beiden. Tarek und Nabil von Crescendo Trading haben mal gezeigt, wie es geht, live im Orderbuch zu traden. Ich würde Sie jetzt ganz kurz bitten, einmal, genau, da ist der